Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for October 3rd. Midweek, we're sitting on a Wednesday. Another mixed day in the market, another day where we saw try to run only to have in later parts of the day some profit taking come in. So let's see how she all played out. Before we do, quick look ahead to tomorrow's earnings. We have Constellation Brands and S&P 500 company coming out before the market opens. We'll also have Costco, much bigger name, maybe coming out after tomorrow's close. But we'll talk about that here tomorrow. So pretty light on the earnings, but we are about out of saying that. Just another week or so, and there'll be plenty of earnings for us, and that's an exciting time. It's an exciting time. Taking a look at the markets, again, one of those days where we pushed up early, and we're showing a lot of strength, kind of hit those intraday highs, and kind of sold off the rest of the day. S&P kind of worked back to that resistance level, called it a day, sold off a little bit. Really nothing to see here that we haven't been seeing the last several trading days, really the whole week, where we push up, sell off, aren't really doing anything to change us technically, but really having a heck of a time once we get to resistance. Nobody's even trying to get us through resistance right now over on the S&P. Very similar situation with the NASDAQ too, where we're running up into that resistance and then boom, taking the profits. It's not bad, but it's not unreasonable. It makes sense, but I'm kind of getting tired of seeing it. 3 days in a row. Give us something different. But that's where we find ourselves in the NASDAQ and the S&P, both testing and at least for day 3, unable to break through the resistance levels. The Dow, of course, broke through yesterday, closing above resistance, showed really good follow through early before giving back much of its profits as well. All of these indexes continue, in my opinion, to be bullish. Nothing has really technically changed. Just have not been able to, the bulls want to, but they seem to be lacking conviction to my eyes right now. We did bounce back on the Russell a little bit today. Of course, that was, we knew that eventually that was going to happen. We got had a couple of very steep days of selling. We now, we were kind of at the bottom of that trading range yesterday. We now know where support is. We know it shouldn't go below that. That would be an even more bearish signal. Of course, you can look at this one of two ways. I'm buying the bounce off of support. We've been here before. A resistance, we have a ways to go. There is some wiggle room between here and there. Or you can look at it and say, well, that's true, but I'm not touching it. I never personally like to buy things that are breaking the support. Just one of my own personal things. I miss out on some bottoms because of that rule, but I have that rule in place for a reason, and I understand that not everybody is me. But we certainly are seeing the beginnings of some upward movement. But we really, I think today's candle was very important information. If this breaks that support, I don't see any reason we don't work towards the 200-day moving average. We'll have to see if the support holds, if it breaks, how it plays out. But personally, I remain on the bearish side of things and not really interested in bullish plays, even though I can understand that argument betting on this support level. That's just not for me. A very bearish day over in the material sector, have a bearish engulfing candle develop over here. Started out okay, ended terrible. Yuck. That's a very bearish candle, a very bearish signal in the bearish engulfing candle. I don't think you can look at this. You can't convince me you should be bullish on this. Maybe it'll work out that you should have been, but when I look at a chart like this, I can see the bearish side. I can see the argument to leave it the heck alone. I can't see the argument, at least today, to be bullish overall in the material sector. And I can't see an argument for being bullish overall in the energy sector. Another strong day over there as we're kind of working in. I don't know. I think you could argue that we barely broke above that resistance zone. I'm fairly conservative. I would kind of say that we're fighting it. I wouldn't say we've broken out of it just yet personally, but we are definitely fighting resistance one way or another. Overall, remain very strong, very bullish over in the energy sector. We had a nice gap open on the financials today, And then much like the rest of the market, kind of had a little run and closed pretty flat on the day. Very beat up sector, of course, over the last little while. As we work into those moving averages, that 200, that 50, let's see how we respond there. Let's see how we respond there, kind of lining up with this previous swing low that kind of ran into here today. So in that general area would be the area that I'm going to be looking at as resistance. Again, anything that's looking like this, I'm just not interested. As a buyer, it's got to give me some buy signals. And going up isn't a buy signal. It's just not going down, right? But again, that's just me. Over in the industrials, very similar to the Dow, really showed a lot of great strength early, closed very flat as profit taking came in yet again. Overall, really we're pretty much in the same place. We're a lot closer, we came a lot closer to testing that resistance, but really I don't think anything has changed my view of the technicals of the industrial sector right now. I still think it is one of the stronger sectors personally, one that I am most interested in from a bullish point of view at least. Over in that tech, we were able to finally close above that old resistance. So while the NASDAQ wasn't able to break resistance, we did see our tech ETF break and close, not by much, but it closes a close, right, above that resistance level. So I do think overall you continue to have a bullish situation over in the technology sector right now. Staples is hanging by a thread. Another bearish engulfing candle on the staples. They've been fighting at that 50. It looked like maybe they were thinking about catching their footing yesterday, and all that goodwill is gone today, closing very close to support on a bearish engulfing candle, potentially on an M or a double top. We haven't broke support yet, and as I say all the time, it's hard to break support and resistance. But if that breaks, I can't see any bullish case, and I certainly wouldn't trust buying off of this support level. The risk to reward would be there, but that is how we got there and how we've been behaving is very concerning to me. So, hey, it can go sideways if it wants. That's fine. It breaks that support, I will definitely give it a bearish grade. No two ways about that. Very bearish development, in my opinion, at least over on staples. But hey, support is still holding. And as long as that holds, I will, of course, respect it. Utilities, the party came to a screeching halt today after a nice several-day run off of the 200-day moving average. Talked about it. They really didn't have any resistance, right? We talked about it yesterday. Now they've got to challenge that resistance where they closed yesterday. It was easy the last few trading days, not counting today for people in the utility sector, because it was just going straight up. Ran into a challenge, really got knocked down here today. I do think that is going to continue to act as a challenge. I do personally consider that resistance, and as long as we're below that until things change, and they can, but they're not going to change tomorrow, until we're above that, I'm going to continue to have a bearish view over on the utilities. Definitely some opportunities over there in the bearish retracement department if you find yourself that you are interested in trading utilities bearish. I also understand leaving things alone, but I just big failure at resistance today. Didn't really even try. It just said, nope, we're resistance. We've got a lot of profits to take. Let's do it. Not that I blame anybody, because I wasn't there, but if I were, I'd like to think that's exactly what I would have been thinking yesterday. Yep, good luck to those who want to stick around. We did see a little selling over in the healthcare sector, which we don't see very often. Certainly a little more bearish than we are accustomed to. Obviously, that is just a one-day deal. Nothing really has changed from a technical point of view over in the healthcare sector. Just wasn't another green candle, which is, with healthcare, I mean, that's notable these days, right? But really nothing has changed from a technical point of view over in the healthcare sector, in my opinion. We're just about to test support in the discretionary, though, much like our staples. This should hold. If this fails, this is the same type of situation that our utilities and real estate were in a couple of weeks ago, right? Where they went sideways after being an upward trend. Support broke. Again, I'm not saying it will break. I'm just saying if it does, things got pretty rocky pretty quick. And so, obviously, support's tough. It's lining up at that 50-day moving average. I would expect this to be a tempting price for the bulls. The price is great. I really like the price. I just don't like how we got there. We have seen no signals from the bullish point of view whatsoever. We basically sold, and closed at the bottom pretty much at every candle each of the last 3 days. So while we're at support, and I'll definitely respect that, I will expect it to put up a fight here. without any sort of turnaround, I could never get on board. And I would maybe be open to it if we see, say, a doji tomorrow. We'll see if we get that, though. But that is where we find ourselves over in the discretionary sector. Real estate continues to be very, very, very weak. We've already seen some downward movement off of its very short-term bearish retracement from late last week. Broke support again today, pushed below the 200-day moving average to rally and pretty much close sitting right on top of it. Still, in my mind, very, very bearish in the real estate sector. Not a place I would want any bullish money right now. And even more failures, even more confirmation, yet another failure at support. Yuck if you're a bull, yum if you're a bear, right? So over in the communication services, another pretty flat trading day. It continues to go back and forth, as you know, and I think in a lot of ways it's trying to find its own identity since it is a very new sector, of course. But really, nothing has changed. You know, technically, we're about where we were here yesterday, as there's a lot of back and forth going on over in that sector right now. So that is where we find ourselves in our various sectors. We are seeing some a little bit of everything. You know, there's definitely some bearish signals out there. Seeing some bullish signals. It's kind of a weird week in the market where it seems like it wants to break and run, and it just doesn't have whatever it needs to do it. We did actually break and run on our dollar today, though. Of course, yesterday we were challenging resistance. We had that fake out on the intraday. We showed that upward movement today, and that is always so important on these fake outs. You know, if we go back to yesterday, we have to be careful on these because it broke and it failed. It closed right below support or resistance. That scares off some players, right? If we see that downward movement the next day, we saw it here. We saw the downward movement after this failed breakout. It's very easy for all the bulls in this scenario to just, no, I'm not interested. If we actually get that follow through, we never get that downward movement, which is what we saw here today. It's a lot easier for me to see, I got faked out, but it's still a breakout. So that's something that we can all watch for in the future on these failed breaks. How does it respond that next day? That day is very important, in my opinion. Certainly, really nothing to say. A break of resistance is always a bullish signal. Pretty solid movement here today. Well, now basically we don't really have any resistance for another, $1.50 until we work into that, 97, mid-high 96s area. So not a lot of overhead resistance. We are seeing some strong movement over there right now. Bulls are definitely in control of the dollar. No doubt about that. Gold continues to be boring. It did and we'll take whatever we can get on gold these days, right? It did break the 50 briefly, much like it did yesterday, only end up closing back below it. I don't like that at all, very much. Again, while it's not quite the same as a failed breakout, breaking overhead resistance, the same type of philosophy can be applied to these moving averages, especially the major ones like the 50 and the 200. If I see some downward movement, I will actually expect there might even be an opportunity for a swing trade in gold for the first time in forever. You got a little bit of room, not tons, and probably any movement would destroy your risk to reward ratio. So I'm not going to expect it to happen, but we do have a little bit of room between where we are right now and our support level. Right now, I have a little better idea. So watch that. I do, overall, again, for me, I don't think you can be a bull until we're above 1220 on the current conditions of the chart. That is, of course, just me, but I don't love that candle. But again, if we see that upward movement tomorrow with no downward movement, well, I'd expect us to actually try to challenge 1220. If we see some downward movement, I would expect that to be a legitimate sell signal for a little bit of downward move, although we don't have a ton of room. We have more than we're maybe used to, right? That 1200 to about 1185, 87. So it's not very much room, but it is more than the no room we've been getting lately, right? Silver continues to try to run to resistance, and we didn't quite make it here today. We did sell off of our highs. I still can't trust it. Again, above 15, I can change my mind. You can change my mind. Until then, I just don't trust it. That is just me, and I understand that is just me. But that is clearly a big deal. We tested it yesterday, got pushed down, made lower high today, sold off the intraday highs. So clearly that is an area of concern for the silver traders out there right Over natural gas, I mean, same day, different day, same result. It continues to just kill it. It has been on fire. It just runs and doesn't care about anything other than running to the upside. Still very extended, still very bullish. I guess that's really hasn't changed much the last little bit. Strong run, a very strong run, no doubt about that. So bulls are firmly in control. We are very extended to the upside right now, but that doesn't have to matter tomorrow, right? Clearly, we've been extended for a while. It doesn't have to matter just because it looks extended to my eyes. Just because I wouldn't dare buy it that high doesn't mean it needs to come down. Sometimes we try to convince ourselves of that. We should not do that, right? So, and lastly, over in crude, it happened quick. It happened quick. We actually did pull back to that breakout point on the low of today. We rallied up off of that. Boom, popped quick. It was fast. You had to be there if you wanted to use that as an entry. No doubt about that. But we remain very strong, continue that nice movement off of the breakout. Really nothing to say other than we're bullish. Whether you're in it or not, or looking to get in it or not, we clearly are in a bullish run on the crude market. So you got to be happy. You got to be happy about that, at least if you are a bull. And really, you don't have any good technical reason to be a bear. So I imagine me and all of my friends here at Tackle, we might not be in, but we're not getting hurt because there's not been a sell signal for a while on crude, right? So that's where we find ourselves on a fairly boring. I mean, there was some movement. There was some interesting candlestick development, but I guess maybe it kind of seems like the same day as it's been the last few days. So it kind of seems like Groundhog Day with Bill Murray. It kind of seemed like a boring day in the market to me, but it was a day in the market, regardless of my personal opinions. We will reconvene, of course, tomorrow, see how everything played the day after. But with that, ladies and gentlemen, as always, it is my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the YouTube channel and hit that notification bell to be alerted of any new videos that we've got going over here. Also, be sure to hit us up over at Tackle Trading on Twitter to keep up with some of the things that we're doing and watching on a day-to-day basis. If you enjoy Market Recap, it is always helpful and greatly appreciated if you do give it a thumbs up just to let us know we're on the right track. With that, get out of here. Happy trading, and I will see you in the next one.